and companies trading under the value of their Bitcoin end up giving away more ownership than they receive in return. The most dramatic case, of course, is Naka, the Kindly MD and Nakamoto Holdings merger vehicle. Now, Naka has lost 96% of its market value from its peak. It now trades at just 0.7 times NAV, down from a mind-boggling 75 times. Other firms below water include Tether-backed 21, Semler Scientific, and the Smarter Web Company. The average NAV multiple across treasury firms remains at 2.8, but that's down from 3.76 just back in April. The spread is widening too. Bigger players like MicroStrategy still hold premiums. Smaller ones are slipping into the deep end. Accumulation has slowed down also. In September, treasury firms added just 1,428 Bitcoin per day, the weakest pace since back in May. One analyst joked that treasury stocks just went through a full 4-year Bitcoin cycle in 5 months. First up 5x, then down 70%. Speedrunning crypto pain, if you will. Now, Lund called the declining premiums rational. Many of these firms face advisory fees, insider incentives, and tangled capital structures that make holding Bitcoin more expensive than just holding Bitcoin. Public companies now hold over 1 million BTC, but K33 says spot ETFs and retail flows are emerging as the real drivers of demand, not treasuries. On the derivative side, CME futures are trading at modest premiums again, suggesting a more balanced market compared to the overheated tops. But funding rates remain elevated, leveraged longs are crowding in, and a squeeze is always lurking. GD Culture Group showed exactly how badly this can go as they announced an $875 million share-based acquisition of 7,500 Bitcoin from Palace Capital. The market rewarded them by nuking their stock 28% in a single day. Their market cap now sits at $117.4 million, down 97% from its 2021 peak. Meanwhile, Michael Saylor's strategy now holds over 638,000 Bitcoin, cementing its title as king of the corporate hoarders. Let's take a look here at the Bitcoin Treasuries website. This is the place you can find everything about what your favorite public companies are doing with their hoards of Bitcoin. So right here, you see we have the leaderboard. Up at the top, no surprise, is Strategy. Let's take a quick click on Strategy there, and we can go to their individual page and see what or how their Bitcoin holdings are affecting their overall business. So, guys, if we can just click Strategy there, we'll bring it up. Great. So this is Strategy's page. They got nearly 639,000 Bitcoin right now at an average cost at about 73,000, almost 74,000 a pop. There you go. Saylor approved that one. Right now, they're currently in the green pretty considerably on those holdings, nearly 60% right now. So they can ride out some big Bitcoin turbulence if we see any in the near future, which is not always the case for a lot of these other Bitcoin treasury companies that started stacking well into the hundred teens, so they have a lot less room for error on those. So if you scroll down, you can even check out how their stock and financials are being affected by Bitcoin's price. I think we just passed it there, but that's okay. Nonetheless, BitcoinTreasuries.net, #1 place on all the interwebs to check out what your favorite public companies are doing with their Bitcoin stashes. So check it out. Let's head back to camera 1, please. Also on that list, you might have seen, was Mara Holdings. They are in the second place with over 52,000 Bitcoin. 21 Capital, founded by Jack Mallers, is stacked over 43,000, and the Bitcoin Standard Treasury Company is sitting at around 30,000. So yes, 1 in 4 treasury companies are underwater right now, but the whales, well, they still seem pretty fat and pretty happy. We're bringing Anant back in. Anant, K33 says 1 in 4 Bitcoin treasury companies are trading below the value of their Bitcoin. Isn't that basically like buying a car dealership for less than the cars inside are worth? Like, how does this even happen? What do you think?
I'm not very surprised. We have seen these kind of abstractions. The way I look at it is like Bitcoin is this massive hole, massive gravity pulling thing. And then people try to position themselves adjacent to Bitcoin, assuming that, some of the power that it is sucking, they will be able to grasp it, right? And a lot of them do, from altcoins to ICOs, they do, but they are like just flash in the pan. So the way I see these companies, they're more an abstraction on top of Bitcoin. So what would really happen if you are going to build that on top of Bitcoin is you have Bitcoin's volatility, and then on top of that you're adding another complex structure, and I think you described it pretty well with different kind of products they offer, and it has its own risks and stuff like that. So this is bound to happen. There might be people
Yeah. And do
who
you
get
think?
it right. There might be people who
Mhm.
kind of like are conservative enough to, weather the storm. But then there will be people, the long tail, would take more and more risk. And that is where you would see, things falling apart. So I'm absolutely not surprised. I would think that this number would go from anywhere from 25% to up to 80%, to be honest.
Yeah, I mean, this whole Bitcoin treasury play has been a big narrative of the Bitcoin ecosystem here in 2025. But do you think now, seeing this, and are investors starting to realize that holding Bitcoin directly might actually be a better idea than holding shares of a company that holds Bitcoin? Do you think this is going to turn more people to holding Bitcoin natively rather than doing it through a publicly traded company?
My understanding is that the most of the money, most of it that comes through for these companies are the ones who cannot directly invest in Bitcoin. So there are lots of funds and hedge funds and pensions that are really not capable of doing that. We saw that with ETF. A lot of new doors opened up, and there are a lot of people who came into Bitcoin even though they wanted. I know a lot of such folks who wanted, but the company structure does not allow them to do that. So they came through ETFs, and then therefore there are many more companies who might want to use this path to get in touch with Bitcoin. See, the problem is not having these companies. The problem is getting to a level of leverage that is going to wreck when the volatility strikes, right? You can really have a nice structure around it, and you can be conservative about it, and you can offer product which are really honest, really transparent. That's why you would see Michael Saylor is very, 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 very keen on having everything transparent, everything announced, everything out there. As soon as you introduce any kind of opaqueness between Bitcoin and what you are doing, that just kind of creates havoc. So it is not a bad strategy, but most of the people will do it wrong. Both are correct.
PayPal is expanding this system to crypto transactions too. That means you can send Bitcoin, Ethereum, or PayPal's PYUSD stablecoin directly through these links. And because these are friends and family transfers, they're tax exempt. No 1099K forms, no reporting, no explaining to the IRS why you Venmoed your buddy $2,000 in Bitcoin labeled pizza. This is a huge shift, okay? For years, crypto lobbyists have begged for exemptions on smaller personal transactions because every other type of crypto use, selling, trading, or paying, normally counts as a taxable event. PayPal is sidestepping the mess by saying personal transfers stay personal. And it's not a small rollout either. The company plans to expand globally later this month, starting in the US, then heading to the UK and beyond. PayPal says it's already seeing double-digit growth in consumer payments, and Venmo just hit its highest payment volume in 3 years. They want to connect billions of wallets worldwide. And remember, PayPal has been all in on crypto for years now. They launched trading back in 2020, partnered with Paxos in 2023 for PYUSD, and now their stablecoin sits as the 11th largest, worth nearly $1.3 billion. The stablecoin also powers their Pay with Crypto feature, which lets small businesses accept dozens of coins. So if PayPal is telling its hundreds of millions of users they can send Bitcoin links tax-free, that's one more giant funnel of adoption pointing straight into the Bitcoin price chart. We're bringing Anant back. Anant, PayPal just launched PayPal Links, where you can send Bitcoin or stablecoins through simple payment links. Do you see this as real adoption, or is PayPal just making Bitcoin look like another PayPal feature? What do you think?
I think this is a welcome change and welcome feature. Not that you could do anything about that, but it is going to give a lot of people exposure to what Bitcoin is, how does a receive address look like, how does the conversions work, and that it is a 24/7 market and so on. What they would not learn using PayPal is basically they would think that is just like sending dollars and maybe the fees are a little lower or higher. What they wouldn't understand is that the two main strengths of Bitcoin, which are censorship resistance and non-inflatable asset, those things are not necessarily they're going to get it using PayPal. If PayPal does not like something and they have censored things before, they can censor your, Bitcoin slash stablecoin transactions also. So you do not get that benefit. Nevertheless, you do get exposed to the idea of Bitcoin and stablecoins, and once you are censored, you will just download a simple wallet like Bitcoin Keeper and or Bitcoin Tribe and start using it. So yeah, it's a good thing.